benefits. Out of the two main fringe benefits which create an output VAT consequence, a deemed supply that the employer has to account for the output VAT on, one of those fringe benefits is where the employer supplies the employee with free or cheap assets or services. So what we've got here is an employer making a supply to an employee of free or cheap assets or services. Now, what this means is that an amount, a non-cash amount, is being made available by the employer to the employee. Now, what we're going to learn later on in the year is that there are certain mechanisms or formulas, if you like, that we use to calculate the value of this non-cash amount, this non-cash award that the employer is making to the employee. Now, for that, for an income tax side, we will use the 7th schedule to the Income Tax Act. Now, I can't stress this enough. Don't go and look to find a 7th schedule in the VAT Act because there isn't one. So the problem here that we find is we're jumping between the two pieces of legislation, the Income Tax Act on one hand and the VAT Act on the other. So number one, I know that in part I'm going to use the 7th schedule of the Income Tax Act, because what the 7th schedule is going to help me to do is calculate something called the cash equivalent. Now, the cash equivalent is the way that the Income Tax Act tells me to create a value, to put an amount on this non-cash award that the employer is giving to the employee, and this non-cash award is in the form of a free or cheap asset or service. So the 7th schedule says to me, please give this non-cash amount a cash equivalent, because it's that cash equivalent that will trigger any employee's tax that the employee will have to be liable for in terms of the Income Tax Act. Now, why do I care about a 7th schedule Income Tax Act cash equivalent when I'm busy dealing with that? Well, the reason I care is because I've got to look at Section 10, subsection 13 in the VAT Act. And what this section says to me is the following. That same cash equivalent that I used in the 7th schedule becomes the consideration for the fringe benefit in terms of the VAT Act. Now remember, consideration is an amount deemed to include VAT, so we would have to multiply by the VAT fraction to find the output VAT the employer must pay over to SARS. Now, we've got to measure these two terms against each other because the cash equivalent in the 7th schedule becomes consideration for the supply in terms of Section 1013 of the VAT Act. So now let's start a little bit slowly and say to ourselves, all right, the cash equivalent, says the 7th schedule, is the cost of this free asset or cheap asset or service to the employer. So whatever it cost the employer to obtain this free or cheap asset or service is the cash equivalent that will be made available, or the amount of that supply that will be made available to the employee. So we've got to be careful because the 7th schedule says to us, take the cash equivalent less any amount the employee has had to pay the employer for that free or cheap asset or service. So if, for example, I, the employer, say to the employee, right, I have purchased a computer, and let's just use some simple numbers here, at 114. The employer purchased that computer at 114 and is going to give that computer to the employee, and the employee is going to pay the employer 50 Rand for that computer. What does that mean? Well, step number 1, is the employee getting a free or cheap asset from the employer? Yes, they are. If they had gone and bought the computer for 114, it would be a lot more than the 50 they're paying the employer. So where do I start? The cash equivalent starts off at the cost of this computer to the employer. So if the employer is a VAT vendor and the employer is able to, the employer would have already claimed some of the cost of that computer as input VAT. So if the employer paid 114 including VAT for that computer, then 14 VAT would have been claimed by the employer as input VAT. So the cost to the employer of this computer is actually 100, because despite paying 114 for the computer, the employer has taken that 14 included in the 114 purchase price and claimed it back as input VAT. So the cost to the employer of this computer is 100. We reduce that by any amount the employee has paid the employer for that asset, and what's left is what's known as the cash equivalent. So the cash equivalent is the remaining 50 Rand. Now be careful, because that cash equivalent becomes consideration for the output VAT calculation. Now consideration itself is deemed to include VAT. So we will take that 50 as including VAT, multiply by the VAT fraction, and that will be the output VAT that the employer must pay over in the VAT period of the month that the employee gets that computer from the employer at this cheaper price. So please be careful. It's going to feel confusing, because when we take the cost to the employer of an asset, we might already have had to say that the cost to the employer excludes VAT, because the employer claimed that VAT back from SARS. So the employer's cost of this computer was 100. We reduce that by any amount the employee paid for this free or cheap asset, in our instance 50. So the remaining 50 is the cash equivalent. Now we bring that into VAT language. That 50, the cash equivalent, is the consideration for the supply, and consideration includes VAT. As such, we take the consideration, multiply by the VAT fraction, and that will be the output VAT that the employer pays over to SARS. Remember, always when it comes to fringe benefits, the output VAT will be triggered to the extent that the employer makes a taxable supply. So once we've taken that consideration amount for the deemed supply, worked out the VAT fraction, we will still multiply that by the percentage taxable supply, standard or zero rated, made by the employer, and then calculate any output VAT. So please be careful about what it means to move from one piece of legislation, get specific ways of calculating an amount like the cash equivalent, to bring that cash equivalent over to make it consideration deemed to include VAT, multiply further by your VAT fraction, and then the percentage of taxable supplies made. So please don't get confused with the differences in this terminology. And sometimes we feel like, hang on, we've already claimed VAT, now it's VAT again. Just follow the meaning of the words and what the definitions mean in each of the legislations. Cash equivalent 7th schedule becomes consideration for VAT. Consideration is deemed to include VAT, so we need to multiply by the VAT fraction to get the output VAT out. So just watch those terminology differences and don't get yourself confused.